Okay, here's a question for you. Is it better to have Wall Street analysts on your side or maybe the greatest long-term investor in the world? Because that's sort of the $9.7 billion reality facing Occidental Petroleum right now. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Our mission today is a deep dive into Occidental Petroleum, that's ticker OXY. We're digging into our research from October 2nd, 2025 to figure out what's really moving this stock.
And yeah, you definitely need some context here. The market feels like it has a split personality these days. You see these contradictions, right? Like GDP growth looks pretty solid, suggesting things are okay, but then consumer sentiment is just stuck way down at recession levels, really low. And you add in the government shutdown that's still going on, plus oil prices slipping back. What creates this cautious headwind? It's pushing against almost everything.
Yeah, a cautious headwind is a good way to put it. But despite all that macro noise, there's one piece of news for OXY that's cutting right through. The fundamental story is pretty straightforward, but wow, it's transformative. Warren Buffett's Berkshire Hathaway. They're buying OXY's chemical division, injecting, $9.7 billion cash?
Exactly, $9.7 billion cash. And what's really key here is just how big that is and what they'll likely do with it. This isn't just, a pat on the back. It's a massive capital injection, probably aimed squarely at reducing debt, streamlining the whole operation. It gives OXY incredible financial flexibility going forward, which makes the stock, currently trading around $47, look potentially quite undervalued. In fact, our research shows fair value estimates pointing towards $65. One model, maybe a bit aggressive, even suggests it could top $100.
Oh, hang on. Over $100. That's more than double where it is now. Are we sure that's not just based on, super optimistic oil price guesses? Or is there some real kind of hidden value there that Wall Street's missing?
Well, that big gap suggests the models are looking past just the daily oil price. They're factoring in how much better the balance sheet looks after this deal. Plus, potential future efficiencies. Buffett's often buying that long-term asset value, something commodity analysts focused on today's price can sometimes miss.
Okay, and that brings us right to the core conflict here, doesn't it? Because even with this huge Buffett catalyst, this potential for a cleaned up balance sheet, a whopping 71% of Wall Street analysts, they're still rating OXY a hold. And get this, the number of bullish ratings has actually gone down recently.
Yeah, it seems analysts are sort of anchored to two things. One, the general gloomy macro picture we talked about. And two, just the recent softness in oil prices. They might see this $9.7 billion as just like a one-off accounting thing. Maybe they're overlooking how transformative it could be because, hey, OXY is still in the exploration and production game, right? Exposed to those oil swings. It's that classic battle, short-term price momentum versus long-term financial strength.
Okay, so if the analysts are kind of on the sidelines, what about the traders? Are they paying attention?
Oh, they are wide awake. If you look at the options market, it tells a very different story. The put-to-call ratio, it's down to 0.27. Super low. That means for every one bearish bet, there are nearly 4 bullish bets being placed. That's significant optimism. And traders seem laser focused on the $50 strike price. They're really targeting that level.
Right, $50. And that optimism lines up with the charts too, doesn't it? The technical picture seems pretty clear. Since May, the long-term trend has been positive. You see higher highs, higher lows, plus a pretty powerful long-term trend signal just flashed bullish recently.
Exactly. So the bigger picture technically supports the bulls here. If you put it all together, that $50 level really is the key battleground. That's where the bulls need to make a decisive push. And on the downside, the main support area you got to watch is around $45.
So boiling it all down, what does this mean for someone watching OXY? What's the strategic takeaway from our research?
Okay, pulling it all together, our final outlook on Occidental Petroleum is cautiously bullish. Now, why cautiously? Well, because you can't ignore those macro fears. The sliding oil price or that stubborn analyst consensus, those are real headwinds. But that transformative $9.7 billion Buffett deal, we think it outweighs those fears, especially when you see that strong bullish flow in the options market and the solid long-term technical trend backing it up. And we have a clear line in the sand. If the stock breaks cleanly below $45, okay, then that bullish thesis is likely wrong. It would mean the macro headwinds are just too strong right now.
Makes sense. And I guess in a market this uncertain, having Warren Buffett write you a nearly $10 billion check, well, that's probably about as good a risk mitigator as you're going to find. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.